Hey guys, it's Canadian Kyle here, and welcome to the Wealth Holders Podcast. Today I have Brett Heath, President and CEO of Metalla Royalty, ticker symbol MTA on the Toronto Stock Exchange and the New York Stock Exchange. Brett, how are you doing?
Doing good, Kyle. How about yourself?
I'm doing well. Where are you calling in from?
I'm down in sunny Puerto Rico right now, so
Oh,
away from the Canadian cold up there. But I've heard that it's just starting to get better.
yeah, it's warming up now, so it's good. We had some snow 2 days ago, which was a surprise. But Puerto Rico, what are you doing down there? Just enjoying the sun?
Well, it's as of right now, it's one of the more friendly state, if you can call it. It's not technically a state; it's a territory. But just a great place to call home base while the craziness of the world goes on, with very limited travel and lots of restrictions here and there. So great place to hang out during the chaos for sure.
Okay, so you're living there now.
Yeah,
Okay, cool. Puerto Rico. So where were you born?
I was born in California, California native, U.S. citizen, and lived there various parts of California for most of my life, and yeah, just recently down here.
Very cool. So Brett, I like asking my guests what they were doing when they were my age. So I'm 25. So what were you doing from 20 to 25?
20 to 25, I was basically just making lots of mistakes. And as crazy as that sounds, it's one of the best things that you can do at that age. It's a period of your life that there's very little risk, that you can't recover from. You've got your whole life ahead of you. You've got your whole career ahead of you. If
Yeah.
you want to go out and try something new,
Mhm.
try something, start a business, do something that would, you know, particularly if anything is driven by a passion, I would highly recommend, um, to do that when you're young, and give it a try. And it doesn't have to work, and don't be afraid if it does work or it doesn't work. But definitely give it a try, because as you get older, you tend to not only have more responsibilities.
Mhm.
Eventually, most people have a family and kids, and you have other things that can sometimes prevent you from doing and making certain decisions in regards to really following your passion. And I think that's an important thing to do when you're young.
For sure it is. And did you start that KSIR capital management at a young age? I like that. I was looking into you started this company, and I like the name of it. KSIR is risk spelled backwards, eh? And you were looking as a hedge fund for small and micro cap mining companies, and it's definitely risky investment. So maybe talk to the younger listeners out there, because this space does attract younger people for the returns. So really explain the actual risks involved in the small and micro cap mining industry.
KSR was started about, it was about 10 or 11 years ago or so. So I was at the time, I was in my kind of mid 20s.
Okay.
And before that, I've always been an entrepreneur. I had other businesses that I started, and like I said, failed. A number of different things. Some worked out okay, some didn't work out, some worked out great. Just a number of different things that I did when I was young, that I was able to take a lot of that experience, and a lot of that knowledge to be able to apply in business and life going forward, which I think has been huge. In regards to KSIR, it was, I would say I was a little bit past that, starting to get much more of a foothold. My background's economics. I went to school as economics. So I've always been driven into the investment side of really any business, although I've had other businesses in the past, but that was really a focus of mine. And at the time, there was a great opportunity that presented itself, which was the 2008 crash, 2008-2009 crash.
Mm-hmm.
And these things don't happen every day. And I teamed up with another individual that has now become a great friend, and then also has helped me build the two companies that I'm involved in, which are Metalla Royalty and Nova Royalty, and that's EB Tucker. And I actually met EB at a conference. Can't remember even where it was so long ago, but I think it was in New York. And Rick Rule was actually the speaker that day, and he was coming on really early. And I think there wasn't another person in that conference room that wasn't on Medicare. So when he came and sat a few seats away from me in the front row, I looked over with surprise, and that's actually how we met. And about a year later, we formalized the KSR Capital, and it was a very great experience. And it was a lot of that I was able to leverage those relationships into what I'm doing now. So I'd say that's kind of where the journey really began for being in the resource business.
Mm-hmm. And did you get burned a few times in this business at the young age, or do you make a lot of mistakes?
Well, it's these markets are very volatile. So the trick is always stay disciplined. If you stay disciplined, you can limit your downside. Obviously, if you get the right investment at the right time in a bull market that deals with junior resource stocks, the upside can be, as close to as unlimited as you can get. We've seen some just unbelievable moves, which always is what continues to attract capital to the sector. Yeah. Although, I say that with 99% of the companies will just lose your money. So it's speculation for the most part when you're dealing with small companies. And I would highly urge, if you're a new investor for for junior resources, I'd probably start with some more steady companies, some larger companies, and use a very small amount of your capital for the exploration, the small micro caps, because there will be some stock market tuition that you'll probably end up paying, and it'd be better if you pay smaller amounts than larger amounts.
Sure. And what drove you to the commodity space then? Because you said you had an economics background, but why commodities?
Well, it starts with gold and silver, which is what we're giving investors exposure to in Metalla Royalty. And from a macro perspective, I think we're in a period of time that is, that we're going to be going through, that particularly your younger listeners are going to go through a period of time where we're going to see a substantial shift in money. And this hasn't happened for a long time. Your parents' generation, they probably had the most cushy generation in the U.S. history, and your grandparents, even, really anyone born after World War II has had it pretty good. So, it's going to be something new. I don't think people around the world are really prepared for it. And finding an asset class that can not only protect but help you succeed in this transition is what we wanted to do, and was kind of what was the reasoning for starting Metalla in the first place. Because there just was not a lot of assets. Sure, you can go buy physical gold, physical silver. Those are that's, particularly gold, that's true wealth, that's money. I don't even look at gold as an investment at all. I look at it as the same as just holding cash in my bank account. It's extremely liquid. it's going to do better than cash, obviously, but it's going to maintain that value, not so much make you a lot of money. And as we have been watching this, and we've been watching this for a long time. Like I said, we're going on this journey in and around the resource sector. It's going up on over 10 years now.
Mhm.
So it's been a while, and it's continuing to play out. I mean, not in a million years would I think I or anyone else imagine what could be going on today,
Yeah.
with trillions and trillions of dollars being printed, and continue being printed, and debt levels that are clearly not going to get paid back. And so if you are a student of history, you'll understand that none of these things go on forever. And the governments today are not the first governments that have ever tried it. They've got a few more tools that they're at their discretion that they can use, given that they're not firing up printing presses anymore. It's just keystrokes, so they save a lot of paper and ink. But the reality is that all of these things end the same way at some point. And where are you as an investor? What asset class are you going to hide in? I think royalties, particularly gold and silver royalties, but all royalties, are going to be probably the safest asset class. And I say that because, when you go through these transitions, oftentimes things like physical gold that are going to be a significant competitor to global currencies are demonized, or they're taxed, or they make it more difficult to move, or a number of other things that can happen with physical. I mean, physical is the ultimate liquid asset. It's off the grid completely, which is another huge benefit. It's not someone else's liability saying, I owe you this. Like, you have an asset. You can take it anywhere in the world, if they let you through TSA.
Mm-hmm.
But I mean, you could take that asset anywhere in the world and get the real value for it. And that's a pretty incredible thing. So, but yeah, I mean, royalties, I think, royalties are an equity, and, it's very difficult to demonize equities or securities because it's such a broad asset class that everybody holds. And so, owning that gold in the ground that's coming out of the ground, that's being produced by the largest gold mining companies in the world, by various different operators in various different jurisdictions, I think can't be more of a safe way to hold gold, because that gold in the ground, most governments, which, the governments that do expropriate gold in the ground, we avoid those because they just continue to do those in good and bad times. But most governments, they can't take gold in the ground because it's in the ground. It's very difficult to get it out of the ground. We've seen even the United States confiscate gold before. So, I think royalties are just an incredible way to ride out this storm, and I think even prosper.
I think it's interesting that you said for the past couple generations they've been rather cushy lifestyles. So you're talking to people that it's hard to commit to buy in physical. It's a lot easier to commit to buy in something on a security because your whole life you're working to make Canadian loonies or US dollars. Like, you don't, it's hard to part with. So at least it's an easier transition to put it into your TFSA in Canada here, or put it in, it's still in the system, but it's leveraged to something that is not in the system, or has no what's the word I'm looking for here? You know what I'm trying to say though.
Counterparty risk.
Yeah, counterparty risk. Mm-hmm. Just to let you know, I agree with you with the royalty model too. Metalla has been the longest royalty company I own, and my portfolio consists of 90% royalty companies. I don't try and get too fancy with exploration or development. I go to the royalty model, and it just makes sense to me, for sure. Now, You also touched on EB Tucker, and I want to. That's one of the reasons I really like Metalla is the deals you make and the communication EB has. He can really paint a clear picture. So, but I want to get it in your own words. What makes you and EB such a dynamic duo?
Well, we both bring a tremendous amount of value to the table, but we're both doing completely different things.
Hmm.
Each of them are both very important, and people when you're working within public markets, you need to have really everything, every aspect of being a public company. You need to have all of that working well in order to be successful. You could have the best asset in the world. If nobody knows about it, the stock price is probably not going to do anything.
Hmm.
Um, and it's important to be able to manage, all the different parts of the public company business. But the actual business is just one out of really three or four, almost five parts that you need to think of when you're involved in a public company. So, EV helps out, tremendously with that and helping us grow the company and both companies, Nova Royalty and Metalla Royalty.
For sure. Now, I was looking into your bio before interviewing you, and I saw something interesting. You, like you said, you had a background in economics, and you went to San Diego State University for economics, and then you went to Johannes Kepler University and studied Austrian economics, right? So my question to you, Brett, is what was the teaching styles like in these two schools? How were they different? Because Austrian's a lot more of a common sense type of approach, right?
Yeah, and it's completely different. I mean, that's what originally exposed me to a different way of thinking when you're looking at economics from what I was taught at, really what everybody is taught at university, at least in North America, I would say. So it gave me a different perspective, which was a great thing. It's always good to have different perspectives, because you live in a global world. It's not just your country. And
Hmm.
when you think about economics, you can't think of it as just your country or just your currency or anything that is individualized on how you see the world, because that's not how the world is. So it was a great experience, in understanding different perspectives on economics. I mean, I would say today we live in a world that is is completely. I mean, economics has really gone out the window. Any type of economic theory, I would say, has gone out the window. We live in a very different world today. It's fast moving. It doesn't make sense, and it's more important today to understand, and watch really where capital flows are moving to get a better understanding of what the future is going to look like. And the old economic rules, I would say, in today's world don't apply as much as they've had in the past.
Yeah, I hear that a lot with talking heads now. It's different economics now, but I don't know. In my opinion, printing a lot of currencies, printing a lot of currency. So that's why I'm heavily weighted in the precious metal space and again in Metalla. So what's Metalla's plans for 2021 and the term?
Well, we're going to keep doing what we have been doing since the very beginning, which is buy high quality royalties, from third parties, on assets that are being built and operated by major, mid-tier major mining companies is the focus. And we're going to continue to build the portfolio, with a risk adjusted, vision to, make sure that we have an asset, an asset portfolio that, is not too concentrated with one single operator or one single jurisdiction, or, anything that could create kind of an overwhelming amount of risk. And I believe that one of the things about royalty companies, and I think is often missed by our peer group, or at least some of our peer group, is that your multiple in this business, these companies trade at premiums, and your multiple is your most valuable asset. And you need to respect that multiple as you're building your company, as you're building your asset base, to really think about how this asset fits into the rest of the portfolio and how it brings accretive value to the rest of that portfolio. And that's been what we've been able to do since the very beginning. We've completed over 20 transactions. We've got over 60 royalties now, spread out mostly through the most proven geological trends in North and South America and Australia, in the good jurisdictions where when stuff is found, it's often been some great discoveries. You spoke about exploration, and I completely agree. It's if you go to a mining conference and there's 100 exploration companies, you come back the next year, maybe one found something.
Mm-hmm.
If they're lucky, at least material. I mean, most of these companies will just drill your money into the ground and you'll never see it again. And then they'll come back and ask for more and more and more. And that, with the promises of those discoveries around the corner, which often never come. Mm-hmm. As a royalty holder, we've got a big exploration portfolio. More importantly, on all of our assets, we get the benefit of not having to put up that capital for exploration. Our partners have put up hundreds of millions of dollars just last year to do what? To find more ounces, to advance projects, to make discoveries. And they continue to do that. If you have the right counterparties, they'll do that every year. So it's a great way, because the true wealth that is generated from a discovery, goes beyond what the gold price is going to do, what the silver price is going to do. There's plenty of examples of that in the royalty business, where true wealth is created, and that can happen. But you want to have 100 or 200 assets that are being worked on by other people's money, and that significantly increases your odds at some point to get that big discovery on one of your assets.
And how's the competition looking like now in the royalty space? Because you guys like third-party royalties, right? And what's it? Because like you say, if you pay a premium, it's okay if it generates real wealth, if you actually find the right spot.
Well, I mean, competition is kind of twofold. So you've got the major royalty companies, which are the ones that are, call it, 2-3 billion and above. And I would say the competition there is pretty heavy. Most of those transactions are very competitive. You're dealing with oftentimes large companies that have access to capital themselves at very attractive rates. So the returns for those companies have come down very significantly, particularly over the last decade. And then you have the junior royalty companies, which, when we started Metalla about 5 years ago, there weren't any companies at the time that were focusing solely on this market. And, we had a huge advantage to go out there. And, it took the sector really 2 or 3 years just to figure out what we're doing. Eventually they caught on, and, within the last year, I think we've seen over a dozen new royalty companies that have come to market using, if not the exact same strategy that we have, some very close version of it. And the thing that's important to understand is that, first off, it's a fantastic model, because it's a very low risk way to scale a business, because you're not giving money to a junior company,
Mhm.
which will run into trouble almost immediately and then come back and ask you for more. You're buying a royalty on an asset that can be operated by the largest mining companies in the world. Okay, so these companies are going to continue to invest in these assets. They're going to continue to increase the value. And as a small company, you can allocate a small amount of capital and grow your business. And if you're doing good deals and doing accretive deals, you can continue to grow your business over time. But I say that this market is also, it's not a dynamic market where it can be repeated over and over again at the same rate, because the reality is that this market, this market of royalties. So and these are all the royalties that exist that were created by some other transaction, whether it was a company that divested some assets, or M&A, or the prospector optioning. Every single time these gold properties change hands, these royalties are retained. But when we went out there and started looking at this and started gathering up and saw this opportunity, we went out there and we picked up what we felt was the highest quality, with the most optionality, and the strongest kind of growth scenario that we could see. But once these royalties are gone, they're gone. I mean, that's the thing to really think about in this business, is that most of the royalties that we've picked up were originated in the 70s, 80s, 90s. So these things weren't created yesterday, and there's tons of royalties out there in this market. So I mean, I think all of these companies will still be able to do transactions, but the quality of the assets is going to be significantly less. And what we're seeing is that the lower quality assets are oftentimes being fought over by a lot of these small companies now, which are really struggling, on the back of this strategy. So I would be really careful to look at some of these other companies, because I don't think that they really had the ability to to be able to do what we've done, just given that a lot of that stuff we've bought, and a lot of what is not available today was 5 years ago. So it's a big difference. And I'd also I would also like to say, be very careful in the royalty business about investing in cheap royalty companies. Most royalty companies, when they talk about valuation, they always kind of have a slide in their presentation. They say,
All of them.
this company's up here, we're down here, this is how you're going to make money. Mm-hmm. But historically, what we've seen is that the companies that have consistently traded at low multiples continue to trade at low multiples. And companies like Franco-Nevada, which is an example that a lot of people use, they're the biggest company. They traded at a premium from $15 all the way up to $220. And they were considered expensive the entire way through. Well, why were they expensive? Well, they were great at buying assets, and they always provided for a lot of great diversification. They respected that multiple, and they kept that multiple all the way through. And so, for the royalty business, you really want to focus on the companies that do that can earn, that have the ability to earn these premiums and keep these premiums, because those are often the ones that outperform the rest.
Yeah, and what I like about Metalla is it's so consistent. Your chart, if you look at it, it has a nice healthy consolidation, shoots up again with an accretive deal, healthy consolidation. And I want to bring it to Nova now, and it looks like Nova will be trading at a premium as well. What are your thoughts on, because it's different commodities, right? You're talking about base metals here, and how much how much like gold is rather volatile and silver compared to copper and nickel. How do you see Nova Royalty moving relative to Metalla, if that makes sense?
Well, I would just, I wouldn't think of them as kind of a relative type of, I mean, they are relative because, you know, they have a lot of the same investors, obviously.
Yeah.
You know, that was a company that, you know, that I, you know, helped put together and found with Alex and EB. And, you know, I, they're two completely different theses for investing. You know, with Metalla, you know, this is protection against your wealth,
Hmm.
and to increase your wealth through this time where we're going through this macro shift, and really what money's going to look like on the other side of it. You know, there's only one way for this to happen, and they're not going to repay the debt. So it's either going to be printed, continue to be printed, and devalued is, you know, I see the only obvious answer here at some point. So, you know, Metalla is giving investors a way to speculate, and not only maintain their purchasing power that they have, in what they're investing, but also I think significantly increase it. And you know,
Yeah.
we've seen that because we've got a great business. And you mentioned the stock chart, you know, being very consistent. Well, what happens is that, you know, we acquire royalties. We're acquiring these things that are very accretive. And so we buy a royalty, we spend 10 million, the market's going to value it at 30. And we go spend 5 million, the market's going to value it at 20. And we just keep buying a lot more and more and more of these royalties. And as the portfolio grows, the whole portfolio becomes more valuable because you continue to diversify the risk on every additional transaction. So not only are you getting the lift, from the actual asset, but you
Yeah.
also get the lift from the whole portfolio, and that comes in with your multiple or your premium that the company gets and trades in the market. So, you know, as we continue to bring these things in, the value will increase. We do more accretive deals. The share price goes up to reflect that. It consolidates. We do more deals, and so on. And we've been doing that since the very beginning. So I think it'll be very consistent. Where Nova, you know, we picked copper and nickel because, you know, we saw what was happening a few years ago. People are just starting to kind of catch on right now, with what we were basically seeing the early trends for back in 2018, which is, okay, we see a fundamental shift in
Hmm.
energy, and it's not just about batteries. It's like energy. Energy is a massive market. You know, think about oil and gas. Think about how, you know, think about anyone that went out in the 1900s and had a lot of exposure to specific areas around the world that produce a lot of oil. I mean, we saw this from the U.S. perspective, you know, in the Bakken formation,
Hmm.
but you also saw it globally. I mean, look at Saudi Arabia and a lot of the Middle East. I mean, what would the Middle East look like today if oil was never used as a form of energy? I mean, I think it would be completely different. So we've got this huge shift away now. Oil and energy, you know, oil's not going away.
No.
It's going to be here for decades and decades and decades to come. But where are we today? We're at the beginning of a new shift, and as the electric side of the story improves, particularly as it becomes more economic, it's going to make new versions of uses of fossil fuels irrelevant. So there's going to be a time, and it's probably going to be in the next, 5-10 years, where, all of a sudden anything that's going to be built is not going to be using fossil fuels. And we're already seeing that with all the auto manufacturers. They're saying, no more combustion engines starting at 2030, starting at 2035. You're seeing mandates from governments for this already. And what we see is that the cost of solar, which I believe is now the cheapest form of energy, and the productivity of the electrification of not just the automobile industry, but the world, is actually going to be the driving force. And so what metals or what inputs, if you're not using all of these fossil fuels, you have to replace it with something. And the big beneficiaries through all of our research show that copper and nickel are going to be the two biggest ones. Now, this is in a sector where technology moves extremely fast, which is why, and on purpose, we avoided the rest of the other metals that basically play into this picture, because what we've seen is that all of the peripheral type metals have a high probability of being replaced by something else. And if we're trying to build a business for the long term over the next decade, you have to focus on kind of the meat, the nuts and bolts of the driving force of this electrification process. And so, we feel copper and nickel are the two metals that are going to be the clear winners through this process. And so we went out to go get exposure to the largest copper and the largest nickel projects in the world, which, I would say is a completely different animal than gold and silver, because there's very, very few of these big projects. And then on top of that, the timeline from these projects to go from discovery to production is oftentimes 3 decades, sometimes 4 decades. Most of these big copper deposits that are going to supply the next century of users were discovered before you were born. And oftentimes a while before you were born, even before I was born. So, it just goes to show that if you can get a foothold in these generational assets, the biggest copper and the biggest nickel projects, these things are likely going to produce, most of them have a reserve life of 30, 40 years, sometimes 50 years. A massive amount of time when you're talking about mining. But the reality is that these mines are likely going to go for another century, as we've seen with the predecessors. A lot of the big existing mines today have been going for upwards of a century. So if you can get exposure to these assets now, which is what we're doing with Nova, and you can put them all together, it becomes just a unbelievable vehicle for the next decade and to capitalize on this transition. So, I think it's a very exciting story. It's going to be a story that will continue to grow, I think, over the next decade. And with Metalla, who knows how long these central banks can keep the music on, but at some point it's going to turn off. And so you don't want to be in a situation where you're reactive at that point, because it's too late at that time. If you haven't taken the time to learn about this now and position yourself for these, both of them really are two macro theses that we think are going to play out. And if you don't position yourself ahead of time, and you're reactive, then it's just going to be too late.
Well, like you said, you were proactive with Metalla, and there's only a select amount of royalties. And now with Nova, you're proactive with Nova, the first of its kind. And that's a huge first mover advantage, because who else is doing it? You're acquiring these, and it must just be a fraction of how many royalties in the copper and nickel space compared to the precious metal space. So it's exciting to see you guys got in at 2018.
Yeah, exactly. And I think, I would not be surprised. It took a few years for the market to understand what Metalla was doing. And now there's lots of companies that are trying to do something similar. And same with Nova. It's probably going to take a couple years, but I wouldn't be surprised 2-3 years from now, there's lots of other companies trying to do the same thing.
For sure. Well, we're running low on time here, so we better get to the vault. So everyone, make sure to like and subscribe, but we're going to get into the vault now. It's a great way to end it. And you've gone through your trials and tribulations, and now you've created something really great with Metalla and now with Nova. So I like letting the guest finish off and in the podcast. So here's your plug now. Say whatever you'd like to say, Brett.
Well, what I would say is that it's important to understand and truly have a track road on how you can build wealth over time. And investing can do that to you. Investing can provide freedom for you at some point as you continue to do it over time. And it's really important to understand when you are investing to do that homework, do that research, find out like what the risks truly are, and do your best to be able to succeed. And I think if you're interested in gold and silver or copper and nickel, for those two themes, this is what I've done, and along with my team and everyone else as a joint effort. These are two things that we think are going to be very significant things that happen in the future. Mm-hmm. And these are ways that we wanted to play them with our own money. And so I would just leave you with that in regards to I think that these are a couple great options.
I believe so. Well, thank you, Brett, for taking the time. I enjoyed talking to you.
Yep. Thanks, Kyle.